Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to The Deep Dive. Today, we're looking at a set of sources that feels less like a market report and more like, a briefing from 3 different rooms.
Right. You've got a geopolitical war room, the U.S. Treasury, and then the strategy office of a major energy company all in one stack.
It's a really dynamic set of information.
It is. And our mission here is to connect these seemingly disparate dots for you and really understand the core forces at play. Because right now, the global crypto market cap is sitting at a very robust $3.24 trillion.
A huge number.
A huge number. But we aren't just here to talk about the number. We're here to explore the specific external catalysts that are driving this sudden and pretty powerful momentum.
Okay, let's unpack this then. The first thing in our stack shows that the big market pump, the thing that really shifted the whole mood, wasn't a new piece of tech.
No.
It wasn't an interest rate decision. It was a geopolitical shockwave.
Mm-hmm. The capture of Venezuelan leader Nicolas Maduro by President Donald Trump.
Which is a crucial detail because in the short term, what do markets really want?
Predictability, stability, and this decisive tactical capture has been interpreted by institutional capital as a real display of American strength.
And resolve.
And resolve, which, that translates immediately into the perception of a more stable global environment.
And when you remove that perceived instability, the capital has to go somewhere.
It flows. It flows right into risk-on assets.
Yeah.
And we can see this sentiment shift. I mean, it's reflected perfectly in the data.
You're talking about the fear and greed index.
Exactly. For the first time in almost 6 months, it moved decisively out of that pervasive state of fear.
Where is it now?
It's into neutral. Sitting at 42, I mean, that is a massive psychological hurdle to overcome.
A huge hurdle. And okay, the index shows the mood, but the money, the institutional money, that shows the conviction.
That's right. That sentiment shift was confirmed by huge ETF inflows almost immediately.
How huge are we talking?
We saw ETF inflows jump by $645.8 million.
Wow.
And look, this isn't retail FOMO. This is serious institutional validation. They are putting hundreds of millions of dollars behind this narrative of a stronger, more stable geopolitical landscape.
And this is where Bitcoin's, core utility really comes into focus.
It does.
Because if you're a citizen or even a wealthy individual in a region like South America that is constantly dealing with volatility, with regime change,
Where do you go? When your local currency and your political structure are just completely unstable,
you need an escape hatch.
you seek shelter.
Yeah.
And Bitcoin's role as that borderless neutral store of value is fundamentally reaffirmed in times like these. It's an escape mechanism for capital.
Now, if we take that short-term bullish sentiment, which is based on perceived U.S. strength, we have to contrast it with something else in our sources.
And this is the really interesting part.
The incredibly concerning long-term macro backdrop right here at home. I'm talking about the U.S. national debt.
It's not just that it's big. It's the speed. The acceleration is just dizzying. We have a report from Congressman David Schwickert that shows the U.S. government was adding an average of $6 billion a day to the national debt through 2025.
Wait, say that again? $6 billion per day.
Per day. The sheer scale of it is, it's hard to grasp. You have to break it down.
Okay, break it down for me.
That means the national debt increased by $69,433 every single second.
Every second.
For the entire last year. And for context, it took the United States over 200 years to even reach $1 trillion in debt. And that was back in October 1981.
And now we're adding 6 times that amount before lunchtime every day.
Exactly.
Which raises the question, is the government even structurally capable of paying this down? What does this mean for the dollar?
Well, it means that inflation isn't some temporary bug. It's a structural feature. It's required to debase this massive pile of debt.
So fiat money is designed to lose purchasing power over time.
It has to. So the real question for an investor is, how do you protect yourself in an environment of constant debasement?
That's the core question. And people will say, okay, Bitcoin, but it's so volatile day to day. How do you square that daily volatility with this idea of it being a reliable, long-term store of value?
Well, I think we have to understand that we're asking it to do 2 different jobs. Its ultimate utility, its real power, lies in its fixed supply.
21 million.
21 million. It's mathematically certain. And that finite, predictable nature positions it as the ultimate deflationary hedge. It's designed to preserve value across decades, not necessarily across weeks.
So you're saying Bitcoin is the long-term wealth anchor, the thing you hold to protect yourself from this debt storm.
Precisely.
While we use other things for, buying a coffee.
Exactly. The volatility, the transaction costs, right now, it's not ideal for daily purchases. That's where things like stablecoins or maybe future CBDCs will come in. They're built for speed and stability.
The medium of exchange.
That's the medium of exchange.
Yeah.
And that allows Bitcoin to focus on its primary critical role as an escape ramp from the printing press.
Okay, so that printing press creates this environment of infinite debt. But at the same time, we're seeing this fierce resource crunch for something that is very, very finite.
Energy.
Cheap, stable energy. And our sources show this battle is playing out right now.
Yes, it's a perfect pivot. We're looking at a major strategic shift by a big mining company, Bitfarms.
What are they doing?
They are completely exiting the Latin America market. They're selling their Paso Paysite for $30 million.
Exiting an entire continent is a huge move, so where are they going?
It's not just a relocation, it's a repositioning.
Right.
They're moving toward North American high-performance computing and artificial intelligence infrastructure.
HPC and AI. Why that wholesale change?
It's a direct response to the economics of the Bitcoin halving cycle. We see this pattern every 4 years, about 6 months to a year after a halving. The cost to mine each Bitcoin.
It goes up.
It goes up at a, quote, ridiculously high pace. Miners have to innovate, they have to get better machines, or they have to get out of the business.
And the market is telling them that the most profitable use of their energy infrastructure isn't just mining anymore, it's selling compute power to the AI industry.
Exactly. AI data centers are competing directly with miners for that same cheap, stable power. And right now, AI firms are willing to pay a premium. The demand is just insatiable.
This demand has to be putting incredible pressure on energy grids everywhere.
It is.
But you mentioned something fascinating before, this idea of miners acting as buffers of last resort. Explain what that means in practice.
Right. This is how they survive and integrate. Imagine it's a hot summer day in Texas. The grid hits peak demand, and it needs, say, 480 megawatts of power instantly to stop a brownout.
Okay.
Bitcoin miners are unique. Their energy use is interruptible. They can just flip a switch, turn their machines off for 30 minutes, and free up that massive power load almost instantly.
And they get paid for doing that.
They get paid a fee by the grid operator. They are effectively selling power back to the grid and stabilizing it. They become essential infrastructure providers, not just consumers.
So AI isn't going to kill the mining industry.
No.
It's just going to force it to get much more professional, much more integrated.
That's the survival mechanism. It moves them from being purely speculative miners to being a necessary integrated energy service.
Let's turn to institutional validation now, because all of this is happening while smart money continues to pour in. And when you talk institutional conviction, you have to talk about BlackRock.
You do. Their position is just staggering. They ended 2025 holding over 771,000 Bitcoin in their spot ETF.
771,000.
Just to give you some context, that makes them the largest single holder of Bitcoin globally through an ETF. They hold more than even MicroStrategy.
Wow. And that commitment, that capital, is what gives context to some of the long-term predictions we're hearing.
Like the one from BlackRock's own CEO, Larry Fink.
Right. What did he say?
He's mentioned an optimistic long-run price prediction of $700,000 for Bitcoin.
I mean, whether that happens or not, the fact that the CEO of the world's largest asset manager is even using that kind of language says everything.
It reflects an unprecedented level of institutional belief in the asset's future.
Okay, running through market dominance quickly. Bitcoin is still holding strong at 51%. Ethereum is stable around 17–18%. But we saw a ton of action in another layer one, Ripple, XRP.
Yeah, that was a big move. Up over 11% in 7 days. They actually managed to overtake Binance's BNB in market cap.
What were the numbers on that?
It was $129 billion for XRP versus about $123 billion for BNB. That's a serious reallocation of capital.
And on the more technical side, we saw a fascinating shift in the world of decentralized exchanges, or DEXs.
We did. Meteora, which is a Solana-based protocol, it briefly overtook the industry leader Uniswap.
In 24-hour volume.
In 24-hour volume, Meteora clocked in at $1.66 billion, while Uniswap was at $1.11 billion.
And that's the classic narrative, right? Faster transactions, lower fees on a protocol like Solana start attracting the high-volume traders.
That's the driver. But you have to view this cyclically. We saw similar volume spikes on, PancakeSwap recently. It shows where liquidity is moving to find the path of least resistance. Uniswap will probably retake the lead, but these spikes are important.
Let's shift now to global policy. It's always interesting when a very tightly controlled economy starts to embrace digital assets.
Right. And our source points to Turkmenistan.
A country that just legalized crypto mining and exchanges. That's a major shift for a state like that.
It's a profound policy shift, but it's one dictated purely by self-interest. They see the economic opportunity.
But they're terrified of losing control.
Completely. This is what we call controlled integration.
So how do they enforce that control?
The central bank oversees all the licensing. And, crucially, the law defines virtual assets strictly as property or investment instruments.
Meaning
they cannot be used to pay for goods and services. So you can have it, you can trade it, but you can't use it as peer-to-peer currency.
So they're letting the Ferrari into the country, but they're telling you it can only be a museum piece.
A perfect analogy, yes.
That focus on control and infrastructure brings us right back to our main theme, energy and compute power, which takes us to Saudi Arabia.
They are building something called the Hexagon Data Center. It's a massive $2.7 billion project.
Part of their Vision 2030 goals.
Exactly. And the scale just confirms their strategic intent. It's going to have 480 megawatts of Tier 4 capacity. That makes it the world's largest government data center.
480 megawatts. That's the same number you were using for the Texas power grid example. This is foundational for their national data sovereignty, for their AI systems.
Absolutely. It reinforces this idea that energy stability and compute power are basically geopolitical weapons now.
And speaking of AI applications, we have a South Korean company, EcoPeace, deploying AI-driven water cleanup tech in places like Dubai and Singapore.
This is fascinating. It's a key part of smart city development.
So what's the AI angle? How does it work?
The system uses autonomous robots and smart sensors to monitor water quality in real time. But the AI component is what's critical. It analyzes the data, and it can proactively remove harmful algae from the water before a major toxic bloom happens.
And so it's predictive.
It's predictive and preventative. It integrates AI, robotics, and environmental sensors into one platform.
So after covering all of this ground, geopolitical shocks, accelerating debt, the battle for energy, what does it all mean?
Well, I think the key findings are pretty clear. The market's momentum right now is really being driven by this perception of geopolitical stability.
Which is attracting that massive institutional capital.
Right. And that optimism is happening against this stark contrast of the, frankly, unsustainable U.S. national debt, which only reinforces the need for Bitcoin as that structural deflationary hedge.
And underneath it all, you have this infrastructure war between AI and Bitcoin miners. The AI data centers are insatiable, and that's forcing these critical strategic shifts, like Bitfarms getting out of Latin America.
Ultimately, the competition for cheap, reliable energy is now the central theme in digital innovation. That $2.7 billion investment in Saudi's data center, the pivots by miners, it all confirms that energy is the new currency.
So we'll leave you with a final provocative thought to mull over. This immense global drive for AI requires building larger, more efficient, and much more stable energy grids all over the world. So if AI is demanding industrial-scale power, will that boom inadvertently create the exact, stable, cheap energy environment that Bitcoin mining needs to thrive in the long run? Could a competitor today actually become a long-term strategic enabler for the decentralized network?
And that profound interconnectedness between geopolitical confidence, national debt, and the technological demand for energy, that is the space you need to keep watching.
Absolutely. Thank you for joining us for the deep dive. We'll catch you next time.